What up, old Uncle Two? Back with you once again. All right, so it's time for another weekly outlook. A day late because markets were closed, but here we are. This is how we do it. All right, so last week I left you off on the S&P 500 with an Elliott wave expectation, potential, but really I honed in on the Wyckoff theory, and I pressed upon that based on having returned from this spring low, this sign of strength high, that if we were to hold above what had been resistance and became support, that we would then be due for markup next. And that I warned, however, that if we were to break back below support, there's a chance that instead of being all in accumulation range, and you have to tune back in last week to know what that is if you don't, it may have been a distribution range. However, the caveat that I added that you may have missed is that I would expect it to have made a new high if that were the case. And it didn't make a new high. So despite the fact that we had this rubber band dramatic low, just like we had a dramatic move to the upside, I'm actually undeterred. And that's from an Elliott wave, a Wyckoff, all of the theories. It just means that we're stuck in this range for some more time. And I think now is a decent time to go ahead and reset, talk about things conceptually. Just look at this move. While I don't want to, actually, you know what? We can put this count back on and we can actually leave most of what we have on here. Oh, pretty much we'll leave it all because I don't know that any of this necessarily changes. I think that potentially what we see have unfolded here is that I told you last week that this, if it were done, would look something like that with a multiple zigzag label on it. However, the fact that it has not finished tells me that what we potentially have done, and I would say almost likely at this juncture, we'll have to switch the labeling up here, something that makes a little more sense for what we're doing. And we're going to do this quickly, so forgive me if I don't put the labels exactly where they belong. All right, so we'll go back to this guy, and then we'll go back to this degree. It's not even the right color. It's close enough, but, oops. But what we see is that instead of being done here, potentially what we did is we finished a flat to the upside, which would then simply make all of what we're doing more complex and corrective. Basically, consolidation continues. So then we would have to, as we labeled it here from this high, if, we're proposing this as a one high, we did an A, B, C zigzag to the low, A, B, C zigzag to the high, another A, B, C zigzag low, created a new price extreme with an impulsive move to the high. It has not yet created a new low, and that's not necessarily required, but it could still be a 1 or a 2, but I think it's more likely at this juncture, especially with the depth and what the price action looks like, a completed flat to the high side. But what does that mean that we would look for? What are our options at that point? It means that we are either working on, again, the fact that we would see a corrective to the upside at this, especially at the size, tells us that the downside move should not be starting a motive or a actionary leg at a larger degree to the downside, because we were corrective down, then corrective up, right? So then we should either be actionary to finish that same degree, or and then we go up and make a new high. Basically, I know that I'm hard to understand a lot, but basically, take it from me that that's typically something that we can anchor to. There are no truths in markets, there are no absolutes, but that's something that we can typically anchor to. And there's a few things on this chart that we can anchor to tell us that this is bullish consolidation still, despite this. So the way I would label it now is either, what do I have on there? Do I even have, I have a paintbrush. That's not what I wanted. I would label it that we were either, typically you would start with, B is in the wrong spot. We'll move this, a flat. So we'll make that purple, and then we'll make it minor. Okay, so typically you would start with flat expectation, and I would expect if it's going to be a flat that maybe this is 1, 2, 3, 4, and it's going to finish fifth to the downside here. So 1, 2, 3, 4, 5. More down before that's the final action area to the downside, and we go up to hopefully make like a, you know, up in here 1, get some consolidation, go out for the 3C. Okay, so that's where, as far as the Elliott wave goes, is what I would expect. And we'll just put the line on that to make it a little more clear that it's just a 3, 3, 5. Now, it could be something more even complex. That could be 3, 3, 3, or even, you know, triangular. That still can't rule that out at this juncture. But all we know right now is that this feels like a corrective consolidation, a reaccumulation range before a break to the upside. So that's what we like in Elliott wave. That's what we remain to like in Wyckoff. Well, why in Wyckoff too? When you said if you broke below this, right? But the distinction that I made last week is that I would expect, if it were to be distribution, to make a new high. And that's an important part of just the way in the overall shape of a corrective or a topping move work, right? So let's go ahead and I'll just draw with my mouse, like, you know, I won't actually draw. I'll just hide everything real quick so we can see. Okay, so you can see my crosshairs, right? So in a just typical expectation, what is a bull flag, right? It's where, you know, a lot of times you'll create lower lows or even sometimes higher lows and lower highs, just like this, right? So the fact that we didn't create a new high, which is typically what you will do in a distribution range, is you'll make marginally higher highs on decreasing volume, on diverging momentum, all those sorts of things that we're not seeing any. Oops, sorry, hit the mic. I talk with my hands. All right, folks. All right, so we're not seeing any of those things right now. What we're seeing is that we are getting lower highs and even potentially higher lows at this point, right? We had this one lower here, but you know, this one could be higher than that. So why do I like that? Well, it's just typically bodes well, right? 1, 2, 3, 4, 5. I mean, I can just zoom out and show you time and time again where you slant away and it's not actually bearish, it's bullish. Whereas if you create a new high, that's when you can, I don't want to zoom all the way out to show you, but that's where you can really have your distribution. So we did that early here, and now we've started to slope away. I actually don't hate that at all to stay consolidated. If we had made another high, I would feel much more alarmed, just like I mentioned last week. So I still feel quite like this is bullish consolidation. We could always be wrong. The more complex it gets, the less certain you can be. But I like to say the longer it fucks about, the more likely it is to continue the direction of the trend. And you just trust that usually, right? And it's been fucking about for some time. So not exactly sure what to expect opening this week. If anything, I would say there's a 3C potential to the upside. So maybe, yeah, let's see. That did come up and touch the 50. We'd have to zoom in. We'll go down to 15 minutes. Yeah, it's really ugly. Maybe it's like a Y potential to the upside, or we've already completed a 1, 2, and doing 1, 2 of a third to the downside. But even if we make a new high, I would think that we probably come back down, test the low of this area before we would find some support, and then come up here and try to test the meat of this range again. See if we can actually break up and out of it for once. So I think near term this week, even if right now we're probably bullish biased, you know, and I say right now as far as we're barely at open. By the time I wake up, it could have already been done. But potentially, you know, something like this, you know, even if we get up to this area, I won't get overly excited. And that is around the 6,900 area. We break that significantly, then I'll be on board. But I think that then we come back down and test the 6750-ish, 6760-ish, at least. All right, so that's S&P. Let's move on to Bitcoin. By the way, I didn't tell you guys at the start of the video. I'll probably have to go back and edit it in. We're going to do Bitcoin. We're going to do Solana. And then, of course, we just did the ES. I'm going to hit Bitcoin now. We'll end up with Solana. Okay. So, last week, we left off that the potential was playing out that we would be able to set up for a 3C opportunity. Let me zoom in here. We'll focus on the lower degree because really this is the area of importance this week, and has been for maybe even a couple weeks now. So last week we were finishing up this 1/A, and I highlighted that should it come down in a corrective manner, it would set us up for a 3C potential, right? And then when we went, I think this is when I made a tweet, we went to the downside saying, hey, we had that corrective action. We're really fairly set up for this 3C potential. If not, we'll get something like this white wave, right? Which, to be quite honest, would be my preference at this juncture, just to be done with it. However, take that with a grain of salt, because, and when I say done with it, meaning if we're going to take a seed to the upside, then we're going to have the agony moving down, and the bigger your corrective upside move, it means typically the bigger your downside next actionary would be to continue that trend. So, we don't really want this to get super deep because we love the Bitcoin. So in my preference, it would just go ahead and continue down now. However, as we see off this most recent low, we've broken about the 80% barrier, and this is very impulsive off this side. We do have what could be a nice zigzag to the low, setting us up for another 3C opportunity as we speak. Now, here's where I said not so fast a minute ago on this being a 3C to the upside, but more likely a C is where I was leaning. When we have a potential one of this leg being this size, let's just map it out quickly. I don't typically do this because it's scary accurate sometimes, but people get so caught up in Fibonacci. So I just typically don't over romanticize it because I don't want to give you guys the wrong idea. But let's just, oops. So slight life hack. If you leave the distance of the 1 on your alternate projection tool, when you're trying to draw for wave 3, if you leave 1 on there, which would be the C targets, and then 1618 would be the 3 targets, typically in a standard type of impulse, that 1 will be right in wave 4 primary retracement territory, 382. It happens so often. So if you want to be lazy, life hack, you can leave the 1 on sometimes. So if we just map this out based on air quote the highest probability projections, which we won't even get into the details of that, it's not super high value other than to say we would do something like this. And if we did something like that, this would put us at what relationship to this wave? Definitely over 1, but is it short? It is short of 3. Still short of 3. So I was going to get excited and say it puts us that it's more likely that this would be a 3 unfolding with a 1 of this magnitude. But I'm not so sure. Let's draw that on. Oh, 1272. Oh, that puts you right in the I don't know zone. Oh, what a bitch. That could very well be the case. I kind of hate that. That's exactly where that lines up. Let's see. Let's do some measured move stuff quickly just for fun. We're just trying to draw out some confluences. Don't worry about where I'm drawing things or what they mean, because that'll only probably make your head hurt. I have a lot of confluence right up in here. So we would like to break this area on the wave 3 and then hold it on the 4 if we wanted to make this a low, and then this would become a wave 3 potential, and then our low is in. That's kind of what I was getting at as far as like this thought experiment. And I know this looks like trash because it is. So just a small minor amount of what we think about when we are projecting these all in an instant. I don't need to see the fibs or the count, but that is what runs through our head, and that was basically what was building anyway. So really we would want to break this base channel low or high in this case. Just start feeling good about a potential low being in. It's still not It's still not the probable expectation, but it creaks the door open just a little bit more with the magnitude of this impulsive wave off the low. In the short term, what this sets us up for is a very pretty nice quality 3C to the upside, because there is very little, there's some, but very little C context. And by C context, I mean chance for this to be a C to the upside. And I mean, if you need for me to draw that out for you, I'm sure that you probably wouldn't be watching this video at this point. You gotta probably, to take me, you gotta have some Elliott knowledge, or you probably don't take me. That's just how that goes. But basically, the C context would be that if this was a 3-wave move to the downside, that this is some sort of C of a flat wave, right? Or I'm sorry, but this isn't 3. This is 3. Yeah, there's very little C context. Like, you'd have to basically map it out to be a flat C, which it doesn't quite fit well at all. You could force it in there, but it's let's just say little to no C context, very likely a 1 or A to the upside, meaning that we have the 3 of the 3C, the larger degree 3C to come. If you're not already trading that, the bigger 3C, which you know your boy is, you ain't left out. You ain't left in the cold yet. And I don't necessarily know that this is completed at this juncture. This is rather short in time, but it's deep. It's, I would say it is, yep, right to the 618. Good depth, not terrible time, decent chance it could be done. So we'll look for that to make a 3C to the upside. When we start getting to this base channel parallels, that's when we're going to start to look at resistance potentials and be on our toes. But right now, in the near term, fairly bullish. But like I said, with this being finished, we go back to that ES chart where, I say that there could potentially be another low that could drag this down, make this 2/B take a little longer. I would say probably call this more of a 2 instead of hedging with the 2B. I always like to hedge, but in this situation, we'll call it more of a 2. All right, so near-term bullish, mid-term not as bullish, but long-term super bullish. But the near-term bullishness is sort of creeping towards getting that mid-term bullishness outlook up. And like I said last week, and I've said many weeks in these outlooks so far, and that I've said to the members for years, that's why I don't mind entering positions and taking profits on positions at wave 3 extremes. Because what is nobody probably, actually, I have no idea what anybody else is looking for, but I imagine most people aren't looking for the low to be in. So what would fuck everyone over? If the low was in, right? So play it smart, boys. All right, so Solana. This is basically the chart. I had fudged it around to update it, and I was like, I better just leave it in the context that it was. In fact, I think I have the tweet. Here's the tweet. This is where we were, just like Bitcoin, getting towards wrapping it up. And before we start the bigger move to the upside, finish this large degree move to the downside so we can start some larger degree move to the upside. The bazinga, as I like to call it, as you can see. It's still on the chart. Bazinga. Anyway, as it does, and as I warn all the time, this move got a little bit more overzealous than we thought. And this actually opens the door in a couple ways, in that if we zoom into the 1 hour, and you could see it there on the 4, we see the potential that there's actually 5 swings done right here. It's a little wonky. It's not the strongest, and it's short relative to wave 1, just a hair longer, meaning it wouldn't be the shortest wave, because I can promise you this 5th wave is definitely longer, as we can see from this one. But this could be a compliant 3, 4, 5, put this C in the whole correction down here. But it would be pretty shit, let's be honest. Which, hey, again, what would screw the most people over? A shit count. But this is not very good, but it's something that's worth discussing. It's worth pointing it out. However, I would think more likely that we have actually completed the 3 to the, that's 5. We've completed the 3 and maybe completed the 4, even though this looks just like Bitcoin. So at that point, how big can this get before you really do start to think the low is in? But something like this. And really, if this was an extended fifth to the downside, you would expect it to really rip up more than that, especially at this confluence level. So it's, yeah, this has to stay the primary, but that low end potential, definitely something worth paying attention to. Just like on Bitcoin, it's more worth paying attention to low end potentials, but they are still not top of the probability spectrum. So we're still expecting another low in the majors in Bitcoin. And for this one, just like on Bitcoin, it would look best if it just go down here, take this out, take that out, and then go up, right? That's what we would really like to see, but it doesn't look like that's what we're gonna see because this is, it's kind of setting up bullishly. Well, this could be a C. We'll see. We'll see how it plays out. But either way, let's go ahead and draw this. If we're going to be cheeky and try to do what we were talking about doing with Bitcoin, you already hit the 50. If you didn't get lucky and you wanted to be really greedy, say we return down to the 80.96 area, that could be a decent spot. Anything past that much, you'd be out. So that's your little tight little window. Get your RR really tightened up for Sol. But really, the biggest thing to pay attention to is that on the larger degree, and sorry for getting into so much nuance this week, I'm not supposed to do that, but I can't help myself once I start recording. You know what I mean? Anyway, one of the things that I wanted to touch on is that we've talked about this, we've talked about this pitchfork. We've talked about this channel parallel that we've now hit and found that it is very important. And as we see, look at this RSI, how high it's gone. So the fact that it's gone so high and the price hasn't done all that much out here on the 4 hour, that does lend to tell me that we probably aren't in on the low yet. However, what it sets up for is the thing that we love the most, start identifying those bottoms that I told you that we'd be looking for a couple weeks ago, that it wasn't time yet, and that's going to be divergences. Final actionary lows on divergences, and hopefully on multiple time frames. We see that we've already diverged here, right? Double bottom, but see how much higher the RSI was, and boom, see the reaction you get from it. What's that? That always, well, that's, yeah, pretty much always. If I don't see that, it's not a flat wave for me. And if you don't, that's a super key freebie for you guys if you understand it. If you don't see that divergence on the B extreme of a flat, then that shit ain't a flat. 99.9 times out of 100. Anyway, but it's setting up now for so much beautiful divergence when it does come down, so that it can form this sort of low where this, wanted this tool, where this would maybe come down here before it turns around. And then hopefully price will react more than RSI. And then I've also thrown the slow stotch on there this week because we talked about Alan Andrews last week, another important thing from his theory. Hold on. Let me put this back on bar. Why are we drawing this way? Oh, this is sloppy. We still haven't hit this yet. Oh, we haven't hit this yet. Oh, interesting. Hold on. You're getting it raw, boys. Let's see. Bear with me. Don't bail on me yet. We're just getting this pitchfork right. It's worth it. Yeah, we haven't hit this pitchfork yet. So that's very interesting. All right. So we still haven't hit this pitchfork, but if we do, on not to mention regular divergence, but Alan Andrews like to focus on the slow stock. I can never say this. Stock. you think these things, you don't talk about it with people. Stochastic. There you go. The slow stochastic. If you hit the median of a pitchfork on divergence of the slow stock and react, very bullish in Alan Andrews' terms. So, struggled with talking, gotten too much detail this week, but that's our outlook, boys. And I don't know why you come back, but I'll be here next week for you. All right, boys, toot out.